So let's take a look at the first category. The first category is information. The first product in the information category is the consumer report, which you as a lender, I'm sure, are familiar with. The features of the consumer report is that it summarizes and gives a detailed report of the borrower's credit information based on his behavior in the past and is meant to support lenders in underwriting. The benefit of the consumer report is that you get better and more informed lending decisions coming out of your process, and overall gives you a record of a borrower's credit history. The commercial report is the next product in the information category. Just like in consumers, it provides information about the credit history of loans taken by non-individuals. When I say non-individuals, it means public limited companies, private limited companies, partnerships, LLPs, anything or any entity which is not an individual. Again, besides helping you to make better and more informed lending decisions, it enables you to hasten the disbursement process, sustains business profitability, and gives you an insight into the overall borrowing across multiple lending institutions that the entity might have used to take a loan. Now, combining these two is what is called the combined report. The combined report, especially when we talk about proprietorships, partnerships, and smaller companies, actually combines the consumer report of the directors, the proprietors, the owners with the commercial report of the entity, and therefore gives you a more holistic view of the loan applicant, identifies all the links between businesses and individuals, and makes sure that you have all the patterns or characteristics of any fraudulent or shell entities that have been created by the lending institution. Microfinance in India is an extremely important segment of the financial sector, and therefore it is only natural that a microfinance report is also a product or service that the bureaus offer. It's a more robust search and match algorithm for microfinance lenders who might have characteristics that differ from the non-microfinance lender. And similar to the reports mentioned earlier, will give you a holistic view of the lending, past payment history, and other details about the borrower, but with a focus on the microfinance sector. Now, often you will get individuals applying to you or even companies applying to you where they have a presence internationally. This is especially true when there are people trading internationally as an entity or individuals who are based or are currently occupied in jobs or business outside India. It is possible that they have taken a loan abroad in that particular country, and it is important that you find out what those details are, whether they've taken loans, how much have they taken, are they over borrowed, and most importantly, are they paying back on time. Now currently, there are no relationships between Indian credit bureaus and bureaus outside India, and therefore an Indian lender might not be able to directly access a credit report of an external country, of a third country. The way around that is that you ask the entity that has applied to you for a loan or the individual who has applied to you for a loan to pull a self-report from the bureau of the country in which they are based and provide that to you. It will really be extremely useful to understand the stability, the creditworthiness, the leveraging of that particular entity, and therefore enable you to make a more informed risk assessment. The next product that we are going to talk about is commercial ranking. The MSMEs and emerging corporates have a rank between 1 to 10, 1 being the best and 10 being the worst, based on liquidity, repayment behavior, and again it gives you a fast and cheap way of estimating repayment capacity of the entity that is now applying to you for a loan. Lending is an extremely dynamic activity. People borrow, people repay, people pay on time, people don't pay on time. And it's important that you have information equally dynamically. For example, there are products which bureaus offer called alerts and triggers. Any change, and be it an improvement or a deterioration in the financial status, borrowings, behavior, creditworthiness of an individual, is what is notified to you under this particular offering from the bureaus. You can customize these alerts. So for example, you can say that if the score falls below a certain number, or it rises above a certain number, or you can say if the person has additionally borrowed now, and based on that, the bureau will alert you on a real-time basis when these changes happen. As a lender, it will be a super signal for you to know whether the particular individual or the non-individual, which is the borrowing entity, has actually been borrowing additionally in the market, has been defaulting, has been paying on time, and all these parameters which you as a lender will find useful. Equally important is for you not only to decide at the time of giving the loan, but even on a periodic basis to review your portfolio. Is the overall quality of the portfolio improving or deteriorating? And how would you do that? You do it through a product called Portfolio Review, where based on your parameters, a drop in score, an additional borrowing, a default, a delay in payment, you will get signals about each individual when you run your entire portfolio or a section of your portfolio through the bureau based upon a timeline. So for example, you could say every 6 months or every 1 year. This will give you a better understanding of the borrower's behavioral pattern, not only with you, which of course you know, but equally and more importantly with other lenders. If, for example, the individual is paying you on time, you could be lulled into believing he's good credit. But if that report or that portfolio review warns you that he is now defaulting somewhere else, it's a big signal for you to be careful, because that could be spilling over to your portfolio and his behavior with you also. Equally, if he is defaulting or delaying payment with you but paying others on time, you need to find out why is he negatively discriminating against you. Of course, if he's defaulting with you and everybody else, then you probably have a large problem. On the other hand, if he's paying you and he's paying customers on time, then that is your gold customer. You need to retain him, you need to hold on to him as much as you can. The other information that you can get out of bureaus is what is categorized as the verification process. KYC verification against registries and other data collected by the bureaus automatically is available for you, and therefore does three things. It lowers the burden at the operational level, it saves you on costs, and it reduces any frauds that the customer might have taken. Another product that the bureaus offer under this information category is industry insights. These are reports of a variety of analysis like market share, time trends, and comparison of books with industry standards and peer groups. Please understand, this is not individual data. This is not yours and my individual data or a particular company's data. It's an aggregation. So for example, a lender could find out from here that their growth of the credit cards, how it compares with the industry. Is it better or is it worse? How do delinquencies compare vis-a-vis the industry and your own delinquency? So that comparison and benchmark across growth, expansion of products, delinquencies, NPAs at an aggregate level will tell you can segment your product based on geographies, based on particular categories of loans, and therefore determine marketing strategies going forward. You might want to be more liberal, you might want to be more conservative, you might want to be in certain geographies, you might want to exit certain geographies.
Another product that the bureaus have recently started or made more popular is the new to credit. Now, I think personally, the new to credit is an extremely important product for expanding a segment of your portfolio, which otherwise you might have had some reluctance to do so. These are people who have never taken a loan, and that's why the product is called new to credit. And because they've never taken a loan, you do not have a credit history on them or a credit score on them traditionally. Now what the bureaus are doing is they're offering a credit score for people who are new to credit. So for example, the score ranges between 101 to 200 and tells you that a person who has never borrowed, what is the likelihood of that person defaulting, paying on time, or a probability of him becoming delinquent. The way it works is the bureaus apply a look-alike model approach, and using analytics are able to therefore assign a risk score in spite of the fact that you do not have any credit history. The obvious benefit of that is that a large population of people who otherwise are excluded from the formal lending sector are now eligible to be considered, and lenders will find more comfort in considering them and therefore be able to expand portfolios with an objective process which allows a credit score to be given to these new to credit customers. This will also help in improving marketing. It will reduce acquisition costs and therefore enable the lender to onboard new to credit customers early in the journey of the individual's financial life.
The last offering under the information category is information about legal issues and litigation. Knowledge and monitoring of what is happening on the legal angle is equally important, and therefore you will get information about suit filed accounts, willful defaulters, and similar information with regard to claims, arbitration, and any cases pending with the courts with the bureaus. Obviously, the benefit to you is that you are not blindsided by this information and otherwise encouraged to give a loan not knowing that there are legal cases or any such similar litigation pending in the courts or appropriate authorities.